Good morning, it's March 23rd. This is Rich Posson. Welcome to the Critical Point Podcast. Let's do a quick take here. What is going to occur this week for the S&P 500? And we're showing the June futures here, or prompt futures. Let's take a look at the intra-week swings, the level 4. This is one of them. And then another one came in here on the 19th. And then another one came in overnight. Now, last Friday, we were showing a possibility that today the L4 would come in right at the start of the overnight session. And it was looking smart in that it was also a price objective, and the price dropped overnight to it. But the model has since revised, saying no, it was really just an intraday swing, and the L4 bottom came in this morning. Now, that's the earliest. If we see an abrupt snap all the way back down and then it takes off to the upside, we will revise again and move the L4 out a little bit. Doesn't really change the scenario for this week, or at least into tomorrow. So the bottom line is the model is saying we have another L4 upswing into tomorrow, and it's probably going to be down the day after tomorrow. Okay, so what do we have for upside? Well, the technical side is showing it could be quite easy to run up to resistance around the 2,500 mark, but it's really not showing whether there would be additional upside. Now, how do these L4 swings fit inside of the next larger trend? That would be the level 3, the intra-month trend, and we still believe that it bottomed on the 13th this month, rallied up into the 17th for an L3 top, so the minimum amount of time for an L3 rally, and you can see it didn't rally at all really compared to this high, so it didn't work, and it's just a sign of a very weak market. Now, it is possible that it topped on this L4. It's also possible it tops tomorrow for the next L4, and that would be the latest for a top. However, that would still imply lower later this week. So we think overall the L3 trend was up and it's down, and this is just a rally against that trend, and it's going down later this week. Now, the bounce today is that the Federal Reserve has many more programs to come out, and so additional support, and that's getting people excited. Last week, we think this slowed down. In other words, the daily lows were losing momentum, and it wasn't as bearish as it seemed. All of this was all kinds of policy and programs from the U.S. Treasury, the U.S. government in general, and the Federal Reserve. So the market was hesitating, monitoring those versus forecasting devastation for the economy in the next few months relative to the virus. Okay, now we want to switch to a daily chart. So this is the daily chart, and so those L4s I was just talking about on the intraday chart really were just pops and drops along the way every few days, okay? And what the model's doing is saying, well, there's a sequence there when there was buyer interest over seller interest into an L3 top, and then the decline. We still believe this was the L3 bottom. It's possible it was one of these lows, but it's now run out of time. And we don't think it particularly matters. We're already looking for the next L3 bottom sometime this week. We think it's got to be Wednesday or later, and it doesn't have to bottom to about mid next week. Now, we think the L3 top is already in place. It probably was actually on Friday. We're leaving it here. We don't think it matters yet, but if it was Friday, it just simply means more time to rally into the next L3 top. So we're watching resistance near the 5-day average. It seems like the fund's going to continue to sell near 5-day averages. They do this in a variety of markets, even commodities. We have changed the resistance of a trend channel to Friday's high because we can use the 5-day average for the original trend channel of resistance. So that would be the next resistance up near Friday's high. And then we have support going down through here. And we've got objectives as low as around 2050 yet to be filled, but we're not convinced they will be filled. We see the 5-day stochastic is actually quite oversold. It's calming down. We think volatility is slowly eroding, and even as of today, it's working on a buy signal. We believe sometime this week we will get a level 3 bottom. It's going to rally into the next level 3 top. But this coming level 3 bottom would be the first opportunity for far more intra-year type of bottom, which we'll discuss in the next video. At any rate, consider support may be as low as 20.50. You have to use today's low, the overnight low, as first level of support. You've got resistance coming in the 5-day average around 23.79. You've got trendline resistance coming in near Friday's high as resistance. Bottom line is we think the market can find some support here into tomorrow, but there may still be more downside later this week. And yet, what if the market's going to turn sideways into this level 3 bottom? We think the market is starting to like what the government's doing, and it's questioning how severe will be the future news. As always, manage your risk relative to the analysis of others.